If it sounds too good to be true, it probably is. And every time there is a yield or some return or promised rate of return, there's always some sort of risk attached with it. I often ask myself the question, if I invest in this coin, would I be able to stomach a 70% drawdown? And if there is a 70% drawdown, how would my portfolio be impacted? You can get an SMSF set up for a couple $100. Literally, you get a couple $100, but you got to do it yourself. So there's a lot of misinformation out there and around self-managed super funds. So it's very important that if people are looking to set one up and perhaps even considering that path, that they find information from reputable sources, find a trusted provider.
Yep.
Because it is quite a complicated area.
Welcome to SMSF Insider, where we help busy professionals to gain financial independence using an SMSF. Hi, I'm Troy, founder of Blue Chip SMSF Services. And over the last 20 years, I've helped thousands of Aussies manage the complexities of self-managed super funds. And in this podcast, I'll answer your questions, break down the myths, so you can take charge of your financial freedom. Let's get into it. Just a quick disclaimer and just a reminder that this is not personal advice. So make sure you speak with a licensed advisor before making any investment decision. We've got Simon Ho here. He's the CFO and head of SMSF strategy for Coinstash. Simon, welcome to the show.
It's a pleasure to be here. Thank you, Troy, for having me.
You're very welcome. Simon, give us a little bit of a rundown. Tell us a little bit about Coinstash, firstly, and what they do.
Yeah, so Coinstash is a cryptocurrency exchange. Over the years, we've more recently actually focused more on self-managed super funds.
Yep.
So I myself have a self-managed super fund, and we saw that maybe a year and a half, 2 years ago, that actually we're getting a lot more interest from people wanting to invest in crypto through their self-managed super funds. So the business not only deals with SMSF clients, but we also take on general individual clients, people who want to invest with the company or trust. We offer very low fees, very competitive fees, and access to, I think, close to about 1,000 coins. So one of the largest, if not the largest, coin offerings in Australia.
Yeah, wow. What is, apart from just the coin offerings, there are some other differences, I think, that you guys have compared to some of the other exchanges here in Australia and abroad. What are those sort of major differences from a compliance perspective that that differentiates you guys from perhaps some of the other exchanges?
Yeah, so we made a decision very early on to only focus on the Australian market. Our team's made up of former accountants who know the compliance aspects of self-managed super funds very well.
Yep.
And that's probably our point of difference, where we're Australian owned. We have about 1,800 shareholders who own part of Coinstash. They're Australian shareholders as well, so mum and dad type investors. Some super funds own part of Coinstash. So which means we have very similar disclosure requirements as, say, a public company.
Yep.
So we're very transparent about our financials, how we hold assets. And what else? I think, the main thing is we know the Australian market very well.
Yeah.
And that sets us apart from some of the our peers.
Yep.
I'd like to say that if an SMSF comes to us with tricky questions or they need help, if we can't help them directly, we'll know for sure who to send them to.
Yeah. I know with some of the clients that we've jointly held together and sort of guided through that process, they've all had a great experience with Coinstash, and even just sort of, when you're Googling Coinstash, you can see that some of it's evident with some of the Google reviews. I think you've got close to 1,000 sort of reviews there that are, so I guess that's probably reflective of the service offering that you guys provide. I know it's a super high touch service, which is similar to our model, where we're sort of holding the client's hand through that process. And I know you mentioned, a couple of years ago, you guys saw an opportunity in the market where you're getting, I guess, more inquiries around having exposure, SMSF exposure into crypto. And it's funny because we sort of saw the same sort of thing a couple of years ago. We sort of thought that there was certainly a lot more inquiry and a lot more interest around clients having some form of exposure into, with their SMSF. And you see that now, certainly with institutionals, clients now looking for exposure into that space. What has been the take up, and what sort of percentage of inquiries coming through? How have you seen that over the last couple of years, the increase, I guess, in inquiry in that space?
Yeah, so in the month of July and August, those 2 months, we did our entire year's worth of signups, SMS signups in those 2 months.
Wow.
This year. So it has been growing exponentially. And I like to say it's because of the fact that Bitcoin over the last 10, 15 years has been one of the best performing, if not the best performing asset class in the investable universe.
Yep.
So if people take a long-term view on Bitcoin, then a self-managed super fund is one of the vehicles in which they can maybe buy a little bit of Bitcoin, maybe not the entire portfolios, obviously, but buy a little bit of Bitcoin and then hold it until the retirement. And it's a great way to express. A great vehicle. Not recommending it, but it's a great vehicle that we've seen as the reason for the uptake in crypto and self-managed super funds.
Yeah. Yeah, I guess we've sort of seen the same. It's not, as you say, it's not a silver bullet approach. It's just sort of clients that want some form of exposure in their portfolio, as opposed to, there's obviously clients that want a little bit more than their 5 or 10% exposure. But certainly we've seen the same sort of thing. But it's crazy to think that, you've had a whole year's worth of, in 2 months you saw, sign-ups of a whole year's worth of sign-ups in 2 months. That's certainly more of an explosion than growth, isn't it? It's just a huge amount of take up in that space.
Yeah, and it's not just our numbers. I think the ATO data, they release data every quarter, which says, I think recently shown that there's about 42,000 new establishments over the course of 2025 financial year, which is up from, I think, 10,000 or where it was a few years ago. So it definitely is a rising popularity in not just crypto and self-managed super funds, but self-managed super funds in general.
Yep.
And there's a lot of misinformation out there, and lots of, I guess, dubious pieces of information around self-managed super funds. So it's very important that if people are looking to set one up and perhaps even considering that path, that they find information from reputable sources, find a trusted provider.
Yep.
Because it is quite a complicated area.
Yep.
But at least in terms of my personal journey in setting up a self-managed super fund, it was because I wanted to invest in crypto. Funnily enough.
Yeah. Who would have thought?
Yeah. At the time, the super fund I was with didn't have any crypto options, obviously. This was back in like 2016, 17. So I thought, okay, what are the other options out there? And I didn't really want to invest my disposable income because I had just purchased a property back then. I didn't really have any, extra funds to invest in Bitcoin. So I thought, okay, well, self-managed super fund is one of the options. And obviously went through the process myself, educated myself, looked at the ATO website. Coming from a tax background myself, accounting and tax background, admittedly it was a bit easier for me to understand it. So I could sort of make the decision myself quite easily. But it was mainly because I wanted to invest in other asset classes, and it definitely has been a learning journey, a long but a journey that's full of learning around diversification, the types of assets I should or shouldn't be investing in.
Yep.
Which I guess differs by person depending on the stage of their life. But
yep.
yeah, it's it's been good to experience that firsthand and also share some of that experience, do's and don'ts that I've learned over the years with clients.
What might be some of the do's and don'ts, and what might be some of the coins, to buy? And I know we've spoken about on our podcast, we've spoken about some coins, we're talking about liquidity and some of the lower cap coins that perhaps don't have the liquidity to get in and out of. Is there something you can share with us regarding some do's and don'ts, or perhaps coins, do's and don'ts, and ICOs and some of those types of things that clients should be aware of?
Yeah, I guess it wouldn't be limited to self-managed super funds. I think it's just general investing advice, or not advice, but tips. Is if it sounds too good to be true, it probably is too good to be true. And every time there is a yield or some return or promise rate of return, there's always some sort of risk attached with it. An example that I can give, which if people have been in the crypto space for some time, they would know of the Terra Luna collapse. Basically, it was a algorithmic stablecoin that was promising 20% yield, flat rate. And at the time, it was
yield.
Yeah, per year in yield.
Yep.
So if you put 10 grand in, it'll be 2 grand in interest.
It's a nice yield.
Commas. Yeah, I know. And this is it was in like a low interest rate environment. It was when interests were like below 3%.
Yeah.
Obviously, people flock to it, but with any sort of high yielding or promised high return, there's always an associated risk with it. And unfortunately, with that sort of arrangement, investors lost a lot of money because the risk was basically that it was the algorithm backing Terra Luna meant that the collateral was unstable, and as soon as people started, pulling funds out of that stablecoin or that protocol, then it caused basically a bank run essentially.
Just a house of cards, basically.
Yeah, exactly.
What? So I know, just going back a step, I know you said you come from a tax background. Do you want to give us a little bit of a background around your background in taxation?
Yeah, so I started my career as a tax accountant at KPMG. I spent about, I think, a year and a half there, and I was basically servicing large corporates, but also in Brisbane there was I was quite fortunate to also deal with private clients. So by that I mean your family groups with mum and dad with family businesses, and then they might have like a self-managed super fund or a trust. So I dealt with a few of those clients as well, and then decided to move in-house. Worked in finance, accounting finance, for a number of years in helping other businesses save on tax.
Yep.
And then at KPMG, I met Ting, who's the CEO and co-founder of Coinstash, and I had reached a point in my career in 2021 when I thought, okay, let's take a risk. Let's try something new. I've always been passionate about Bitcoin. I bought Bitcoin back in 2013, 14.
Wow.
And I remember around that time as well, Ting and I presented on the tax implications of Bitcoin. I presented on income tax implications, and Ting presented on the GST implications of Bitcoin to the wider KPMG tax team back then. So 2021 came, and I've been with Coinstash ever since. What was
the just out of interest, what was Bitcoin trading at back in 2013?
It was between 250, I remember, between 250 AUD and 600, 700.
Yeah.
I think it went as high as 1,000 AUD back then.
And just what's it trading at today? We talked about this in the way.
Yeah, 90K US, which is probably 140, 130 something AUD.
That's
so astronomical
growth.
Growth.
Yeah.
Yeah.
Yeah, awesome. I guess it's sort of goes back to the age-old theory of time in the market and not timing the market, but obviously being invested over a long period of time. That normally is a great strategy, right? It's not about sort of a quick fix or getting rich overnight. It's been a long journey for you, right? It's been sort of over 10 years since your investment journey in this space.
Yeah, 100%. And the thing with Bitcoin is that I guess not sure about other asset classes. Maybe it holds true for other asset classes as well. But the thing with crypto markets and Bitcoin as well is that a lot of activity happens within maybe like a month or two.
Yep.
And then for the remaining 10 months, the market trades sideways.
Yep.
And it's very difficult to pick when the flow activity will happen. So yeah, absolutely. Like if I had bought and held all my Bitcoin in 2013, 14, I would be in a very different position. But yeah, definitely buying and holding over the long term tends to work out better than people who trade in and out of coins.
Just on that, so talking about trading and in and out, and I guess one of the attributes of digital currency like Bitcoin and Ethereum and crypto, for example, is its volatility. And I guess that can be deemed in a positive way or a negative way. But I know we've spoken briefly about this on the way here, that it can, it's a great, can be a great attribute for those trying to get in or that do want to trade. Having that volatility allows them to, when it does come off and it does correct, creates these buying opportunities for those either that are more of a longer term investor, or they're dollar cost averaging, or their short term trading. That is one of the attributes of crypto, and can be deemed as I guess something positive for that asset class.
Yeah, I think can be seen as a feature. So volatility can be seen as a feature and not a bug.
Yeah,
for sure. I mean, there's the whole derivatives market, trading market built around cryptocurrency these days, where you can long and short on leverage, and obviously that impacts the volatility of not only Bitcoin but other coins in the crypto universe.
Yeah.
And there are lots of overseas platforms that have made a lot of money off traders trying to time the market.
Yeah.
But definitely for any sort of emerging asset class, volatility is something that can be harnessed as a positive in a diversified portfolio. If anyone were to invest in Bitcoin, then definitely need to consider it as a broader part of portfolio, because crypto could fall 50, 60, 70% in a week's time. And I often ask myself the question, if I invest in this coin, would I be able to stomach a 70% drawdown? And if there is a 70% drawdown, how would my portfolio be impacted? Would I still be able to sort of sleep at night?
Yeah.
So I think always good to invest responsibly. Always good to invest responsibly.
Yep.
Not only Bitcoin, but any other crypto coins.
Yep. I guess that's most asset classes, right? You sort of, particularly, you don't always want to go all in on one particular asset class. You do want to have a little bit of diversification. But do you see, as the crypto space has emerged, do you see that volatility sort of starting to sort of come out of the asset class a little bit more than perhaps 5 or 10 years ago, where you were seeing those wild swings? Certainly with some of the bigger coins, you're seeing some of that volatility starting to come out of the bigger coins.
Yeah, I think the Bitcoin moves over the recent months and year have not been as large as previous years.
Yep.
I remember the previous cycle when FTX and Celsius and basically that's kind of implosion events occurred. It dropped from 69,000 all the way down to 16,000 US,
Yep.
which is almost a 80% drawdown.
Yep.
I don't see it happening this cycle. I'm not saying it won't happen. I mean, there are some headwinds that people are talking about, like digital asset treasuries and OGs selling, and yeah, there's always going to be headwinds and tailwinds that people talk about, but I do see that volatility dropping off, and I think that's probably a sign of a maturing asset class. The investor base is perhaps less retail, they're chasing less of the thrill of investing and perhaps more of a responsible type of investor where it's perhaps a certain percentage of their portfolio as opposed to being 100% of their portfolio.
Yep.
And certainly like we're seeing that in the self-managed super funds that we see on our platform. They invest through DCAs. They maybe spread their buys over a certain period of time, 6 months, 8 months, and it's very methodical type of investing. I mean, not saying that there aren't any clients that like to take a bit of a
different risk profile.
Different risk profile. I like to have a bit of fun. Not saying there aren't clients like that, but I think in crypto it's definitely about surviving. If you can survive, then over time, it probably will work out better.
I think you could almost say that about any asset class, couldn't you? Like sometimes it feels like even in property, sometimes you can feel like it's about survival. If someone is exposed, is a bit overweight in property and has leverage, it can be all about survival if you don't have a tenant or rates go up, and there's a multitude of risks in every asset class, really, isn't there? So I guess it's not really specific to crypto. I mean, every asset class has risks associated with it. But it's funny you say, like, certainly now you're seeing a little bit more of that responsible investing, and it is becoming more of an asset class that can't be overlooked. It's sort of historically it's done it's done unbelievably well. It is the adoption is the sovereign adoption is becoming more and more real. You've got places like China, for example, that already has their own coins. You're talking about the EU talking about having their own adoption of digital currency, and even outlawing cash, for transactions over $10,000 or 10,000 euro. There's talk of that actually being contraband. So I guess it is an asset class that can't be overlooked. It's real, it's growing, and the adoption is evident with you've now got institutional money coming into the asset class as well, which I think perhaps is one of the reasons we are seeing some of the volatility coming out of the asset class. Do you think?
Yeah, that's kind of what I was insinuating, is that there are, I wouldn't say it's like the large super funds or the institutional like capital I institutional. I think it's definitely more of the sophisticated retail, if I can put it that way, or maybe like one level below the institutional.
Yep.
With capital I, it's people who who are happy to, so for example, give a certain amount to a hedge fund or a fund manager to manage, or maybe happy to diversify some of their property wealth into crypto or Bitcoin.
Yeah.
It's definitely that end of the market. And with the US potentially opening up their 401ks, which is kind of like the US equivalent of self-managed super funds, although that's not a great analogy, but that's
Of a
probably
super
how
fund.
that's how I'd probably describe it. If the US opens up that type of market, then it's another more sophisticated type of money coming
Yep.
into the market, which definitely takes some of the volatility out of the market.
Yep.
It's not so much the cyber funks
Yeah.
who are sort of betting on the next technology and then selling when it reaches a certain price target or anything like that. But just going back to the point around the volatility and having like crypto being an asset that's here to stay. I don't think we talk enough about self-managed super funds and crypto. One of the things that I found in my sort of SMSF journey is I found out pretty early on that an SMSF can't use leverage, and that's because of certain rules in the legislation that says a self-managed super fund can't put a charge over its assets, which means it can't use its assets as collateral for borrowing. It's only in very limited circumstances that a self-managed super fund can use its assets as collateral, and that's property. And it has to be under what's called a limited recourse borrowing arrangement. But there's no limited recourse borrowing arrangements for crypto, at least not yet, and I don't think it will ever happen. But that's been one of the great. It's a prohibition in the self-managed fund, but I think it actually works out better for the investor because a lot of money is lost on leverage, and sometimes it is tempting to just borrow a little bit more to get a bit more exposure to Bitcoin. Maybe I have 100K, but I'll try and get 150K exposure or 200K exposure through borrowing extra funds. You can't do that in a self-managed super fund. So what that means is that people are forced to buy and hold essentially. And it's very hard to get wiped out unless people invest in, I don't know, like baby Trump coin or something like that, where it's a bit more dubious.
Yeah. There's also the single acquirable asset rule, which doesn't apply to cryptocurrency because you can buy a tenth of a Bitcoin or you can buy a half a Bitcoin, or it's not a single acquirable asset. You can actually purchase a portion of a Bitcoin, so it's not a single acquirable asset. So another reason why you can't get that leverage within the SMSF space or within the superannuation environment. It's a good point that you raised, that one of the good things is probably a good thing that you can't have leverage in this space, because you would probably see potentially a lot more obviously there's a lot more risk associated with leverage, obviously, and not having that leverage available to that asset class within superannuation, within super, is probably a good thing, I would think.
Yeah,
Definitely
a good thing.
Yeah,
yeah.
And with when you first established when you first decided to have some exposure through super, you were saying that initially there was no other way to get exposure at that point rather than have an SMSF, and not a lot has really changed. I know there's some ETFs out there that sort of perhaps I think are fairly limited to how much exposure you can have within your portfolio, and I think not sure whether that's changed, but where do you sort of, how do you see, if we're sitting here in 10 years' time, where do you see asset prices with crypto, for example, like Bitcoin, for example? Do you see it? It's a pretty. I know you don't have a crystal ball, and nobody does, but do you think it's going to be similar to, when we're talking about property? Do you think it's going to be? I know we're sitting here in 10 years' time talking about property. Certainly, we're going to be wishing we purchased property 10 years ago. you think we're going to be talking about the same thing with Bitcoin and some of the cryptocurrencies?
Yeah, I think that's definitely, if we zoom out and look at Bitcoin, it's been on an uptrend. And I know past performance is not an indicator of future performance. So no one has a crystal ball to say that yes, because it's gone from 600 AUD a coin to 140,000 AUD a coin in the span of 11, 12 years. That's going to do the same for the next 11, 12 years. But the thing with Bitcoin over the years is it's been a bit of a chameleon. So it started off as peer-to-peer cash. What brought me into it was the fact that there was no one had to rely on an intermediary to record who owned what. It was all publicly available on the blockchain, and it was literally a peer-to-peer cash. I didn't have to, for example, rely on any of the big four banks to say Simon has 50K and John or Troy has 40K. If I transfer Troy 10K, I have 40K and Troy has 50K. No one has to attest to that. It's all on the public blockchain. So that's what brought me into it. But then the narrative evolved from, if I recall correctly, peer-to-peer cash into international remittance. And obviously it had a bit of a adoption in the dark net, the dark corners of the internet, which kind of propelled its real world usage. And then it's kind of morphed into a bit of like a gold or store of value, as an inflation hedge, a hedge against geopolitical risk, as a portfolio diversifier. What I'm trying to say is that the narrative of Bitcoin has changed over the years, and it may change in the next 10 years. It may not be a store of value anymore. Or maybe it is. Maybe a portion of the market thinks it's a store of value, but another portion of the market may think it's the international currency for settlements between banks or whatever. Who knows what that narrative will be?
Yeah.
But the thing is, it's shown resilience over the years. And I think there's this funny web page on the internet where I can't remember the URL, but every time Bitcoin has been called out as being dead or whatever, it's never died. So I guess I think that attribute of Bitcoin being almost a chameleon is like a man for all seasons. It can weather the storms and survive, essentially.
Yeah. And I guess, we talk about sovereign adoption, I think, with even the talk of that, certainly if that wasn't the case, then I don't think, that idea would have been thrown out a long time ago, but that conversation just doesn't seem to be going away about sovereign adoption within this space with the blockchain and cryptocurrencies. So I think, like you say, it doesn't look like it's going away anytime soon, does it?
No, I don't think so.
Or at all.
Yeah. Yeah. But going to your point about privacy, and I think you were sort of alluding to CBDCs and how the EU is banning cash transactions and things like that. Bitcoin does have a very transparent ledger.
Yep.
So if I send you $100 worth of Bitcoin today, and if someone were to sort of attach my identity to the wallet address that I use and your identity to the wallet address that you use, then those transactions aren't necessarily private anymore.
Yep.
So that privacy and anonymity or pseudo-anonymous nature of Bitcoin is a double-edged sword.
Yep.
So I don't know if Bitcoin will ever return to its roots as peer-to-peer cash, just out of that, just because of that attribute. So it maybe just be something that people adopt as, I don't know, a store of value, or to be honest, I don't know what the next 10 years of Bitcoin will be,
No.
will hold. But yeah, it's probably is here to stay. It's just what attribute it takes on is to be determined.
Yeah, and I think, as you say, with the, I guess, the transparency on the blockchain of each transaction takes away the privacy and takes it away from its initial decentralized roots, which is, which I guess those sort of attributes are almost what some of these, like the EU, for example, are looking for. They actually want to see, they're actually going to be able to see every single transaction that every single person makes by holding these cryptocurrencies and not being able to make transactions in cash anymore. It's almost, do you feel it's almost certainly away from its decentralized roots, being able to having Big Brother looking over these transactions and being able to see each transaction that people make and pulling away from fiat currency? It's almost playing into the hands of what it was set out to do, against what it was set out to do, which was being a decentralized currency and away from, and having that privacy is sort of pretty much, it seems like it's moving completely away from that direction, don't you think?
Yeah, I think definitely being institutionalized, which is good and bad. I think on the balance, it's probably better because there was more flows into the asset class. But certainly, if you went into Bitcoin thinking that it was like the cyberpunk ideals and it was private and it was anonymous, then yeah, Bitcoin's not a great currency for that. I mean, I even hear these days that regulators around the world would much prefer criminals use Bitcoin
because they can track everything they're doing,
right? So, yeah, I think it's good and bad.
Yeah.
On the balance, it just shows it's a maturing asset class.
Yeah. Yeah. I think it just seems like it's. I think the currency will, in my opinion, I think in 10 years' time we'll be surprised at. I think we'll be surprised at the adoption from, over the next 10 years. We'll be looking back going, gosh, had no idea. Who would have thought, digital currency would have been, now become, overtaken fiat currency, and it's now, adopted around the world. I think that's sort of where it seems to be where it's headed. I think we'll be surprised looking back going, gosh, it's hasn't come a long way from where it initially, from its initial roots back in its early stages.
Mm-hmm.
You think that's, what do you think? Do you think do you think we'll be surprised at how far it's come when we're looking back retrospectively in 10 years thinking, gosh, it's we're paying for everything in digital currency, replaced fiat currency altogether, do you think?
Yeah, I'm actually, I think the payments landscape has a lot of potential disruption as a result of stable coins and blockchain. So I think that area will be particularly exciting to see what Visa, MasterCard,
so slow. Payments are so slow at the moment with the, you're doing international transfers. There's got to be disruption in that space. I know there's already disruption there, but it's got to, that space is just ripe for the picking, I would have thought, with the amount of time it takes to do international transfers at the moment.
Yeah.
Crypto is obviously perfect for that space, don't you think? And getting away from the way things are, the time it takes at the moment to do these international transfers, that's got to change, surely.
Yeah, I think so. I think that's it. I think Western Union has started to work with the Solana blockchain on something. I can't remember exactly what it was. Maybe it was like some sort of stable coin or something like that. So yeah, I think that payments landscape and international remittance would be disrupted with blockchain technology. I'm actually quite interested in how privacy can be woven into the blockchain, because I do think that is an area where, for example, if I'm a business owner and I'm taking a cafe, whatever, and I'm taking stablecoin payments today for people to buy coffee, then my competitor will be able to see my takings for the day.
Sure.
If they know my wallet address, they could just walk over to my shop, buy a coffee, pay with stablecoins, and they'll see how much I get. So I think some sort of privacy, like commercial, to enable commercial adoption, onto blockchain will be quite an interesting area, and I think that's probably what these stablecoin companies and payment companies are trying to solve, is how do we get how to use blockchain rails to enable commercial adoption, not to launder money or anything like that. It's really just enable the businesses to be able to function essentially on the blockchain.
Yeah, it's interesting. It's something I haven't thought of until you've just mentioned it. It's true that if there is commercial adoption and people can see what the takings are for the day for your competitor or each individual business. I mean, at the moment, that would be a privacy concern in the current landscape. So you'd have to think, for commercial adoption, there must have to be some sort of privacy, I guess, guardrails or something like that needs to come into play to protect the privacy of some of these businesses if there is a commercial adoption moving forward.
Yeah, and it also reduces the risk of bad actors potentially targeting the business, or if you're like a stepping away from businesses, but if you're a high net worth individual, you kind of don't want your wealth to be so public on the blockchain either, because you become a target for kidnappers and all that kind of stuff, which I think some people are concerned about in other jurisdictions. There's every now and then I hear about people being kidnapped and being asked to pay ransoms in crypto, whatever. So that would be quite an interesting area. I think. Another interesting area would be how the tokens or coins that are issued on a blockchain can or cannot resemble equities.
Just quickly, guys, if you're a busy professional, fed up with traditional super funds and overwhelmed by the setup of your SMSF, we can help. Book in a call with my team using the link in the show notes, and let's build your future on your terms. Now, back to the episode.
When I think about it, there's no reason why, for example, NVIDIA shares can't be on the blockchain. People can trade back and forth, trade with an exchange. That's on the blockchain, like because shares are by nature a intangible asset. It's not something you can touch. I'm less bullish on tokenizing real world assets. So like putting a house onto the blockchain and tokenizing it, in that kind of situation, you're still reliant on some person in the middle to not run away with deed to the property.
If house prices keep going the way they are, they might need to be digitalized or put on a blockchain so you can purchase
a fraction of it, right?
Of the
But then there's still risks about what are your actual rights to the property, to underlying property of that token. Maybe it will all sort itself out, and then there'll be a legislative framework that actually protects investors' rights when it comes to real world assets, like tokenizing real world assets on the blockchain. But I think digital native assets like digital artwork, shares. I'm sure there's lots of private companies in Australia, like PTY Ltd businesses, who would love to sell part of their shares. Part of it, shares in itself to other people. But we've got rules that we need to follow in Australia, obviously. Putting that aside, doing that is actually quite difficult because you've got to find a market for it and find a reputable provider, all that kind of stuff. So tokenizing equities, or at least putting it onto a blockchain, is a particularly interesting area for me, at least.
Well, yeah, I mean, at least there's some, there is some real, you're talking about fundamental assets as opposed to potentially assets that don't really have any sort of any sort of some of these smaller coins that might not have any assets behind them or nothing backing some of the coins. But I guess, like you say, some of the, like a PTY LTD with a real business that's generating, real money and actually has some, it's a real, has something behind it, does make a lot of sense from an investor's point of view, surely.
Yeah.
What has your, I guess, wanted to get your experience. So with your experience with, I know we've got some mutual clients. What has been your experience with dealing with Blue Chip, honestly?
I think we've, as a business, we've started off this SMSF strategy by looking at a few different providers out in the market, and seeing the level of service that these other providers provide. And what we've discovered, and what I've discovered, is that there's a wide spectrum of service levels. And the old adage, you get what you pay for, is quite true. You can get an SMSF set up for a couple $100. Literally, you get a couple $100, but you got to do it yourself. You got to buy the trustee, and do all the paperwork yourself, and roll over your fund and register it with the ATO. Or you could pay more than a couple $1,000s to a financial advisor and ask them to assess whether a self-managed super fund is suitable for you in your personal circumstances. So they look at your entire financial portfolio, your goals for the future, and then sort of decide if the SMSF, or make a recommendation as to whether a self-managed super fund is suitable for you. And some people do that, but then like in between is where there's, I guess, again, varying levels of service. And what we've found with working with you guys is that you find the perfect balance between delivering service, like good quality service, for a very competitive price. And I think that's what our clients really value. And that is that they can go to Blue Chip. If they decide they want to set up a self-managed fund, they can go to Blue Chip and essentially have all the admin work done for them in terms of rolling over the fund and setting up the self-managed super fund. And then that leaves them time to focus on the things that actually matter to them, which is, what coins to invest, how much should I invest, and when should I invest? So all the investment decisions the client can focus their time on, and then leave the admin and the compliance and the housekeeping to you guys, which I think has been a great way for clients to get that first exposure to what it means to run a self-managed super fund. Over time, I would expect them to develop some sort of understanding and get clued up on the technical aspects of it. But at the beginning, it's so important to have a trusted partner that looks after what can be quite a complicated area.
Yeah, I agree. I think with clients that are establishing their fund initially, certainly they might not be experts or might not be fully have sit down, have done the ATO SMSF course online before they've set up the SMSF. But certainly you want somebody that's going to set that up for you initially, take that take that hard work out of it or that complexity out of the whole process, so you can focus on what's actually going to give you the returns, which is obviously the underlying investments being whatever assets they may be, but focusing on doing the research on those assets, and then of course over time, then educating yourself along the way to understanding more around the SMSF and the obligations, but having that partner, having the guardrails there for you initially, setting up the fund and making sure the fund is compliant is obviously pretty important. So it's interesting to know your thank you for the feedback. It's always good to get some honest feedback around the service that we provide and how we can be better than we how can we be better tomorrow than we are today. And that's sort of one of our philosophies, and I think it's very similar to Coinstash in that you guys are always looking to be look how you can do things better than you did things yesterday, and that client centric focus and being involved in the process with the client and holding their hand through that process are pretty important with this type of structure and when investing in crypto.
Yeah, and I think the service levels that we both aspire to are quite high. We have a very high bar for ourselves. We definitely don't want our clients to feel like they've signed up to Coinstash, created an SMSF account, and they have to do everything themselves. I do think Coinstash, for example, we can provide the guardrails. We can do more, like for example, by providing guardrails. And I think we do try to go above and beyond to help SMSF stay compliant with the rules. So for example, as you know, and as clients who are listening who already have a self-managed super fund, they would know that you can't transfer Bitcoin from your personal holdings into the SMSF directly. You got to sell it in your personal, contribute the AED as either a concessional or non-concessional contribution, and then rebuy the Bitcoin in the self-managed super fund. Not many people know that, but if, for example, some people slip through the cracks and they decide, let's try transfer it over, we actually have guardrails on our platform that stop a individual customer transferring from the individual account into their self-managed super fund account. So we have controls in place on the platform. We have audited reports. We have account managers. It's very similar to you guys. We would like to provide a service that's above and beyond what else is available in the market.
Yeah, I guess the last thing we want as an SMSF administrator is then going through the account at the end of the financial year and seeing that there was an in-specie transfer from a private account into an SMSF, and having an exchange like Coinstash that has those parameters in place to stop those types of transactions from happening makes our job a lot easier.
Yeah, and I like to think that if an SMSF on the platform is disqualified for whatever reason because they've contravened the rules either deliberately or inadvertently, we lose them as a client, and you'd lose them as a client as well, because as a trustee, if you're disqualified, then you can't have a self-managed super fund.
Yep.
So that's not a very optimal outcome for anyone involved. So
yeah, exactly.
Compliance is at the forefront of what we do.
Yep. No, that's awesome. Simon, I mean, we could probably sit here all day and keep chatting, but it's been a real privilege to have you on the show, and want to thank you for coming on. So Simon Ho from Coinstash, thanks for coming on.
All right, thank you, Troy. Pleasure to be here.
Yeah. Thanks for tuning in to this episode of SMSF Insider. If you got value from this, make sure you subscribe so you never miss the strategies we share to help you take control of your financial future. Find us on socials at Blue Chip SMSF, or book a call with our team to see if we can help you.